This is a pregnant man.
Alright, forget about the man. Let me show you something more important. If you have been following this page for some time, then you would have probably heard me talk about institutional price, which is the point where institutions would usually get in according to Fibonacci. Now, playing it safe would mean that you get in at this level right here. It doesn't mean that price must come there. It means that this is the only zone where you would be interested. The reason is because if price drops from here, there is a very high likelihood that it will be coming down here. However, price can also take off at the 0.382 and the 0.5 as well. But you only want to get in between the 0.618 to the 0.65, which will be your Fibonacci golden pocket, or the 0.786. Price may not get to this 0.786, but that's your safest zone to get in. Safest because it has drastically reduced your risk. So your stop loss to here would just be slightly below, whereas your stop loss at the 0.618 must be below the 0.786. If you enter at the 0.5, your stop loss should ideally be below the 0.786. So if it breaks this 0.786 and closes two candles below there, you're heading down here, according to Fibonacci at least. Now, if you get in around this level right here, you should expect that price goes back up for the 0.236. As I explained in my other video, these are not actually Fibonacci numbers. These represent the relationship between the numbers in the Fibonacci sequence. Just something I wanted you to know. So this must be used in an uptrend. After an uptrend, you want to get in here when price retraces down here and get out up here. And that's where we have a problem. That's exactly what happened with Bitcoin. When BTC bottomed right here in 2018, we had a first impulse wave to the upside, second wave, third, fourth, and fifth. Now, we can catch the top of this first wave by using the 0.618 to the 0.65, which will be your golden pocket. Yes, you see price bouncing at that golden pocket right there and coming back to the downside. If you inverse this structure, it will give you what I was talking about right here of price coming down to the golden pocket or the 0.786, which is the institutional price, and going back to the 0.236. So it will be something like so. Note that it doesn't have to be exact. You have the 0.236 right there. This could have made you buy right here. Anyway, according to Fibonacci from the lesson I just gave you here, when you see this move from the bottom to the top, which is 5 right here, you're supposed to buy at the 0.786 and sell at the 0.236. This now should be its top, just like this was its bottom. Again, this is all based on Fibonacci. It doesn't have to happen like so. For all we know, it could just go to $1 million. So ideally, you want it here and then another plummet. So now we say that price should ideally go up here according to Fibonacci and the sequence of waves. We had 1, 2, 3, 4, 5 impulse wave count. We need a 3-wave correction. So this might be the 3-wave correction. What will justify that is if price goes up here at the 0.618 or the 0.786. That 0.618 to the 0.786 can be seen when you take Fibonacci from the top of the 2021 bull market to the local bottom right here. So you will see the 0.618 and the 0.786 right here. So long as price is coming up here, it is confirming the B wave. Now, do not mind the C here. It is something for a completely different strategy. It is the AB equals to CD structure in harmonics. So, according to Elliott wave theory, we should have price come up here. However, if price did drop from here at 29K and came back down here to 14K or 15K, that should be a buy. And that structure will depict that price may not go down here. Do you understand how confusing this thing could be? Because we are saying that the higher price goes, the lower it can drop. But if it does not go as high, then it should be a buy zone around here. Which means if price actually goes up here, I am telling you, everyone on the internet will be telling you that this thing is going for 100,000. It's going for 200,000, 150,000. But it would have been confirming a deeper drop instead. However, if it did drop from here, if it dropped from 29k right now and came down here to like 15k, everybody will be saying that it's coming down here. But that will be proving to us that it will actually reverse from here. Now, I know a lot of you will be saying, nah, that thing can never go up here and still drop by 68% and worst of all, 92% or 90%. Let me show you something. From 2018 bottom, we rallied over 300%. That's 339%. Yes? And we dropped by 72%. No one would have ever believed that we can drop again back here. So be very careful when you think this can never happen. And yes, you see the same microstructure here, yes? Move to the downside, retracement, plummet. Move to the downside, retracement, you know what is coming.